I think we can all agree that losing a trade really sucks, especially when you're a beginner and you're not making much money on your account, or you're not even profitable yet, and you take loss after loss after loss. Don't think that gets any better, because once you start trading good and you start making profits, actually you start to feel similar emotions once you start eating into your profits. Because let's say you made $10,000 and now you lost $1,000, you feel bad because that's one less $1,000 than you could have had, right? So you feel the same emotions. And that's where risk management comes in, and is the reason why I made this video, because we don't want to lose all of our profits. And on top of that, we want to maximize our trading potential without trading too tight that we end up closing our trades and then they go straight and hit TP, which you probably see happen a lot in the market. So there's a special way in order to implement risk management, and it's not the classic style that you hear all of these other YouTubers saying to risk 1%, do this, do that. No, this is completely different. This is the best way to implement risk management in your trading style. So without further ado, let's get straight into the video. So when it comes to risk management, there are basics that we have to know. Before we get into the basics, I would like to say there's plenty of content on this channel, so I'd appreciate all support on this video. Leave your comments down below if you enjoyed this video. Leave a like and subscribe if you're new to the channel. I can't tell you how much I do appreciate it. We're on the road to 20K, so if you can make that happen, I really would appreciate it. It's a free way to give back for this content, especially if you enjoy it. Also, down below is my Discord group. Be sure to join that. You can actually reach out to me there. I do reply to you and answer your questions, and you can catch me on the live streams during the week. Be sure to show up to those. Plenty of value there. They start at 9:30 Dubai time, AM that is. So if that fits your time zone, you're welcome to join. That being said, get straight back into the video and talk about risk management. So when it comes to the basics of risk management, the first way to cut losses short and to make sure that you secure and keep your profits is to just take minimal trades. I know that sounds weird to a lot of you who are used to taking 10, 20 trades a day, 5 trades a day, but in reality, I've come to a stage where I'm happy just taking 1 trade a day. Now you might say, oh, he's only taking 1 trade a day. How is he making money? The reality is, if you're taking 5, 10 trades, means you're 5, 10 Xing your risk, if that's even a word. But what I mean to say is that you're using 5 times your risk on 5 trades. So if you were to risk $1,000, right, and you were risking $1,000 on each trade, then you're essentially risking $5,000 because you're taking 5 trades a day. So if you were to just transfer that risk of $5,000 onto 1 pair, not only will you, on 1 pair and 1 trade, not only will you be able to make the same amount of money, but you will cut variance. And that is the biggest thing in trading, is that people don't understand that there's a lot of variance, and the more variables you add is what's going to cause you to end up having more losses, and you're not going to be able to secure those profits, right? And you end up going to blow it long term, especially. And I see this happen a lot. People get lucky on a lot of pairs, and then suddenly they end up blowing it because this pair went up, that pair went down, they forgot about this trade, there was a setup on that pair, and then they just get confused, and what ends up happening is you actually lose more money. So the best way to manage your risk is to trade less amount of trades. What you have to do in order to do that is focus on a single pair or maybe 2 pairs and try to take only 3 trades a day. The reason why you only want to take 3 trades a day is because it allows you to get multiple setups if you have maybe a multiple setup day, and also 3 trades a day allows you to find a re-entry. That is the basics of risk management there. Now we're going to go onto the charts and get into more advanced stuff as to how to exactly manage your risk and what is my advice. So when it comes to the charts here, first thing is you don't want to be risking more than 5%. And if you're a complete beginner, don't risk more than 2%. The reason why I say this is these numbers will keep you safe. Risking 1% is also fine if you can afford a big account, but I think the majority of people can't afford a $100,000 account or anything like that. So you're better off just risking 2%, because that will still keep you safe while allowing you to make at least a little bit more money. If you can't even make money or don't know what you're doing, you shouldn't be on a live account. You should be trading a demo account, and that is the #1 way to manage risk, is not to go blow it when you don't know what you're doing, right? So these are 2 heuristics that I use. 5% is when you start getting really advanced as trading. You can really push the risk without having to have a big account, because, and by a big account I mean still I'm talking about a decent size account to risk a lot. Don't go risking $5,000 on a $10,000 account. Does not make sense. At least a good size account, $25,000. 5% will be decent amount of money there, right? But you know, for majority of you, $25,000 might be too much. For some it might be okay, but in reality most people are starting trading with $1,000 account. Some people even starting as low as $100 just to get started. So that's why risking a little bit more might actually be a little bit better, because it'll be worth it at that point, right? So that's a key way. Reducing how many trades you take is definitely going to manage your risk, and taking the correct amount, the correct trades is the best way to manage your risk. And people will always say like this technique to manage your risk, that technique to manage risk, but in reality managing risk just comes down to being a routine trader who has a trading plan, a strategy that is proven to work, and all of these I have videos on my channel, right? So make sure you have a trading plan, a strategy that works, it's back tested and proven, and you're a consistent trader who knows how to control the majority of their emotions, because in reality you can't control all of your emotions, but if you follow this, you're most likely going to manage your risk to the fullest. So in order to manage risk, don't over percentage, you know, don't risk too much percent in your account, don't take too many trades. But when it actually comes to the trading, how are we going to manage risk? So the first mistake I see people make is they're too concentrated on, if my trade goes the opposite way or breaks a high, I'm gonna cut the trade short and accept the loss. This is a very bad mindset in trading, because in reality, if you're following a good plan, most of your trades should give you an area of profitability. You should be able to get into a profitable trade most of the time. Maybe it hits break even, maybe you didn't decide to go break even and it ends up in a loss. You shouldn't be worrying about it hitting stop loss most of the time, right? Now coming to risk and reward, a lot of people, this is a huge topic in the markets, but risk and reward, I might have to make a whole separate video on that. So let me know in the description below if I should make, comments below if I should make a separate video on that. But risk and reward is technically irrelevant and relevant at the same time, because if you win more than lose, then you can afford to lose a little bit more, right? But if you're losing more than you win, then you have to win big, and that's only when it becomes relevant. So make sure as a heuristic that your trades are most of the time 1-to-1. 1-to-1 is plenty, and I'll tell you why, because there's a special way to trade where you don't have to take a full loss all of the time. So for people who don't understand the way I trade, this might be a little bit confusing, but I'll make it as simple as possible. First of all, let's say we have a structure point right here, all right, and we're going to mark this as a support. So let's say we had a support down here, and we're looking to take a candle from here, right? And let's say it came from a resistance, so if that's going to look something like this, right? And we're looking to take this candle down to this support. So essentially our trade will look something like this, right? Short position, for example, and our stop loss will be above the candle high. Target will be this area here, right? So if we're looking to take a trade like this, our stop loss is the point where we're done. There's no questions asked. You can't argue against your stop loss. Your stop is your stop. And the reason why you put your stop loss there is because this is where the trade absolutely doesn't make sense. If the trade breaks this zone, I need to be out. A lot of people don't manage risk because they're putting stops too tight and taking multiple unnecessary losses. Give yourself some breathing room. If your trading plan is good and if you follow a method that works, which is what I try to teach on the channel, then your trades are going to go in profit most of the time. You don't have to worry about it always hitting full stop loss, right? And the key thing here is that once we push into profit, we have a point to make decision. Let's say we had a support here. If price tapped that support, I can make a decision and say, hey, I'm going to go break even here, and guess what? Now we're risk free. We don't have to worry about losing the trade. But what we have here is we have what I call a 2-point entry, which means at some point in your trade, it has a protection barrier. Think about it. Every time you're entering a trade, you're going into a battle. You're going into a battle against the market. It's you versus the market, and that's it, right? And if it's you versus the market, guess what you have to do? You have to find ways in order to have the most protection in your trade. And just taking a trade where your stop loss is above a candle and the next one can wick and easily take you out is not going to be the best. But if you take a trade where there's structure maybe before your entry, then this next candle might have to tap the structure before rejecting, and this keeps your trade safe. And once you become a little bit advanced, if this closes inside of the range, you can manage your trade and say, look, I don't like how this is looking. I expected it to push down further. Just close your trade and have a re-entry plan. So you have a protection against your trade, and this is going to end up allowing you to manage risk. But most of the time you shouldn't worry about that, because the trade you took has that protection. So if it just rejects, you can just you'll be safe in your trade instead of you having to worry about it coming straight to your stop loss. So let's go have a look at a few examples on the chart and keep this video nice and simple, and hopefully it opens your eyes into how to manage the trade. A perfect example is something like this here, which was if we go on the 15-minute time frame here and we see, let's have a look at something like, where did I take, yeah, something like this here, right? So if we took a position, let's say we took a position here, which was actually a position I did take today, and I posted that in the Discord, so be sure to have a look. And you put stop loss above here, and your target realistically at the time is going to be here. Yes, it did push through all the way through here, but this is your target at the time. So if you took this position here, my stop loss is here, all right? So what could happen here is that I have this zone. This is a support, right? There's a reason why this support was broken here, and the reason why it was broken is because price wanted to continue down. This was a little bit more of an advanced entry because I was entering without the close below, because I had confirmation on the 5-minute time frame of a close below. But we're not going to concentrate on entry confirmations. But the point is, the reason I took this trade is because I knew if anything closed above this line, which is the support, it would be closing back at the range. And for all of you guys who trade those double bottoms and all of that, you can understand that price creating support twice is probably going to be pretty strong, and before hitting my full stop loss, I could cut the trade short. So I have protection. I have that barrier in my trade to say, hey, if things go wrong, I'm not, I have a place where I can manage the trade. And guess what happened? Pushes in profit. The next candle comes back. Where does it come back to? Exactly to this spot. Did we get a candle closing above this line? We never got a candle closing above this line. All we did is, as I showed you in the example when I was drawing above there, we rejected the line and we went down straight to TP, and that was the end of the trade. But the point is, we had this type of protection barrier. For all of you guys taking trades like this, which I see is a very basic analysis and a very basic way to trade, when you guys take trades like this and put it above the previous candle high, now you're in trouble, because look how close this can easily wick into the zone. You want to at least have it a bit of space into the zone, right? And that's why if you notice, most of the trades I take, they're coming out of zones, targeting previous areas that were made. I rarely take these type of breakout trades that put yourself in a situation where you have to put your stop loss below something that is very likely to get hit. So the people who run this, and if the candle starts going against them, they close 50%. That is not a good strategy. You have to close based on logic, not based on emotion. That's the number one thing. So to wrap up this video, I'm going to talk about closing half and closing full. Personally, for me, there is no point of closing half of your trade. The reason why is that you might as well just close all, because if you don't like something in the trade, you might as well have just closed it. And the problem with closing half is, let's say you close half, but you were confused if you should add back the other half when the trade goes in profit. Now trade has to run all the way to TP in order for it to make your money back, right? So essentially you do all of this work for a break-even trade. What would be better is cutting the trade short if you see something that changed, and then if it gives you a re-entry, you can re-enter into the trade with full risk, and that allows you at least to come out in a break-even or even a slightly more profitable trade, because you're entering at full risk with more confirmation, which is the key, right? So hopefully that video helped. A little bit of a shorter video here. And yeah, let me know if you liked it, and let me know if this risk management made sense. And yeah, with that being said, take care, trade sharp, and until next time.